Today we're going to talk about the dangers of penny stocks. And before we get into that, I wanted to talk a little bit about our own background. So this is a screenshot of Nanalyze taken about 17 years ago from the Internet Wayback Machine. And this is around 2005 when we started becoming quite popular. And that was simply a forum that we had put together to talk about nanotechnology. And when I first read some of Drexler's work and started to understand the potential of nano, I got very excited. I went out and started buying stocks, and I wanted to discuss the potential of nanotechnology with other investors. And of course, I made every mistake in the book. I bought and sold a stock 3 times in a single day, and I had no understanding of investing in stories versus actual companies with real revenues. And one of the fortunate things that came out of this, one, was that I decided to move in the direction of finance. At the time I was working in software. And 2, I learned all about over-the-counter stocks and penny stocks. And here's an example of some penny stocks that we were discussing around that time. These were quite popular and very heavily hyped. And I've provided 6 examples here, and just to show how dramatic an impact these firms can have on your portfolio. If you invested $5,000 in each of these companies back then, that would be about $30,000 that you committed in capital. Well, today you'd have about 80 cents. And look, one of these firms, M-Phase, here you can see on the right, I just pulled that from a quick Google search. They're back at it again, and they've pivoted from nano. I'm sure they pivoted into about 12 different tech concepts, whatever happened to be talked about, from 3D printing to COVID-19. And now they're doing what? Artificial intelligence and machine learning. Of course they are. And they will have the same outcome. Why the SEC lets these firms trade is beyond me. Now, we've written about penny stocks quite a bit in the past, and this was before we started putting together our own tech stock portfolio and treating this website a lot differently. And back then we would point out the dangers of penny stocks in order to attract a loyal audience. So initially people would come by and say, oh, you're full of shit. And then later on, they would realize we were correct and say, well, you actually knew what you were talking about. There was no financial incentive for us to cover these different firms. And here you can see a handful of articles that we published. And in one of these cases, let's say a lot of these cases, they would become quite heated. And this was one firm that we looked at. You can see here, the gentleman here has been accused by, in a court of law, for manipulating the price and trading volume of a stock through false and misleading public statements. And I believe this individual and the others listed here had settled out of that. Well, when they went into their next venture, we couldn't believe how blatantly obvious it was that this was a firm that was pretty much doing the same thing they had done before. And we filed a complaint with the SEC. I reckon this was 4 or 5 years ago. Well, only recently did the SEC react to that and delist the company. And if you look here, I just pulled this up. This is a comment from that same individual 2 weeks ago who's talking about shareholder loyalty gifts. Look at the comment here on the left. Cannabis Science Inc., Shareholder Loyalty Gift Center of Excellence. Providing gifts to your shareholders, or free shares, which this company often does. Look at on the left there, all these different rounds and announcements. It's like a lottery game. These individuals are back at it. Their stock has been delisted. On the right, lower right, you can see somebody asking about why their shares don't appear in TD Ameritrade. And this firm is at it again and will continue to solicit funds from individuals who think that they're investing in a legitimate company. This is typically what a penny stock looks like over time. Here you can see the classic pump and dump. This firm here is valued at $85,000. Your house is worth a lot more than that, likely. So this is an example of how they just trade themselves into oblivion before they become delisted. Now, we want to define penny stocks. This is very important. You might assume that a penny stock is any stock that trades for less than $1, and you wouldn't be wrong because that's kind of the definition. However, major exchanges have delisting rules that typically trigger at $1 per share or less. So let's say you're a SPAC and you've gone from $10 a share, as many have, to trading under $1 a share. Babylon Health, as an example, they're trading around 50 cents a share. Well, they've been given a warning. Once their shares trade at below $1 a share for a certain period of time, then they'll be delisted, and demoted to over-the-counter exchanges. So when we talk about penny stocks in the context of this conversation, we're talking about any stock that trades on an over-the-counter exchange or a pink sheet exchange or foreign exchanges such as the CSE in Canada or the ASX in Australia. Doesn't necessarily matter what the price is. Those are exchanges that you should never get involved in. Now, the OTC group and pink sheets group for sure. And we actually had a conversation with an executive over at Pink Sheets. It was probably the worst 30-minute meeting I've ever had in my life, where this individual just parroted talking points from their marketing materials and didn't answer any of my questions. The point is that Pink Sheets can have what they call ADRs listed on it. So unless you're a sophisticated enough investor, you don't really need to be sophisticated to understand how ADRs work, don't get involved in anything trading on the OTC group or Pink Sheets, and stay away from foreign exchanges. We go through a lot of firms such as Brain Chip or Archer Materials that trade on the ASX that we wouldn't touch with a 10-foot pole, and we can tell you that they're being promoted. Simply stick with NASDAQ and the New York Stock Exchange, and you avoid all the pitfalls. Now, if you do decide to start investing in penny stocks, we're going to show you some of the warning flags. We put together this list after analyzing penny stocks for close to 2 decades now. These are common red flags that you'll see. They're usually founded through a reverse merger of a shell. So Bob's Auto Repair suddenly becomes 3D printed blockchain IoT sensors. The company will say they have a patent or a small number of patents. Usually someone on the management team whose credentials and past successes are heavily touted will be the owner of those patents, and they'll hang their hat around this IP, which means nothing. A portfolio of patents and $5 might get you a cup of coffee at Starbucks, because it all comes down to execution and product market fit. These firms will talk all about the size of the market opportunity. Revenues are always just around the corner. There will almost never be revenues that help demonstrate traction for these firms. That's why we don't invest pre-revenue, period, on any exchange. You'll find a lot of times that there will be message boards such as Reddit and meme stocks. These exhibit similar characteristics. You'll have people using phrases like load up, get on the train, the next Microsoft, the next Tesla, an easy 10 bagger. And whenever we post articles pointing out the flaws in these companies, they'll usually come around and make all sorts of accusations, usually surrounding the fact that we're short selling, when in fact, short selling of OTC stocks is very difficult, and we never, ever short stocks, because the irrationality of people who get into these hype trains will far exceed our margin limits. We do not get involved in shorting stocks. The company will always announce partnerships. Memorandums of understanding are very common. In the majority of cases, these are the legal equivalent of a handshake, and usually other types of agreements that go nowhere. They'll often communicate in a very aggressive manner with shareholders, similar to that screenshot that we showed you of the cannabis folks there, talking directly to shareholders and offering free shares and gifts and things like that. So what you can do with these firms, and what we often do as a litmus test, is go back in time looking at their filings and see how many consistent broken promises there are. In some cases, you'll actually see them do a find and replace on their target dates and move them forward a year. It's remarkable. And then when the opportunity doesn't transpire, and usually it's after we've pointed out their flaws, they'll change their name, or they'll pivot into other application opportunities for their technology, as we saw earlier with M-Phase. And what ultimately ends up happening is that the real investors, not the speculators, they usually have mixed results, though one would believe that hedge funds are cleaning up here ultimately, but long-term investors are always left holding shares that are worthless. And you can see some examples here. This is from an article we posted in 2016 about 18 examples of penny stocks that had sunk, I believe, in just a several-year time frame. And I looked up a couple of these that you can see in green. Car Charging Group, it must have pivoted or changed their name. I couldn't find them. But Quantum Materials Corp, you see on the left there, that's a firm that's very near and dear to my heart, because we wrote several pieces about them back in 2013. And perhaps the most time I've ever spent fielding comments from cheerleaders and their management team, and in some cases will be met with cease and desist, but in this case, I started interacting directly with their management team, in particular this individual on the right who asked us to retract this article. And I'll tell you what, I spoke in a great detail with him over months of time, and I believe he was truly genuine. And that goes to the point here that it doesn't matter if the management team is acting in a malicious manner or they're just incompetent. The outcome will always be the same. So what ended up happening is we certainly didn't retract our articles. And here's a comment at the bottom here. You can go to these articles, you can search, I'll put a link to them in the description of this video. It's kind of fun. You can go read the comments and stuff like this individual here, print the whole story, false allegations, and Steve was exonerated of all charges. Likely we're pointing out the fact that some individual involved was previously ran into legal problems. It says, get your facts straight before trying to run a scam of your own to pick up cheap shares. This is probably the worst accusation, the most telltale that we'll see coming from these cheerleaders is that they'll accuse us of bashing a company so that we can buy shares cheaper. It doesn't get any worse than that. Here's an individual, Colin S., one of many, talks about how we're short the stock. The article was okay. It showed some issues, but we question your motives. Always attack the messenger. Have you contacted the company to validate any of your claims? Well, we're simply reading SEC filings as we do with every company. We don't speak to management teams. It's largely a waste of time. And have you considered this? It says, I don't know what your reputation, but after the shit you tried to pull today, you can bet I'll be looking into you. That's great. How you doing now, Colin, with your shares? We pointed out that this company was rubbish, and here's how Colin is doing. So Quantum Materials has been delisted by the SEC. Lawsuits appear to have been filed by shareholders. Here you can see, rather recently, the SEC revoking the securities of this company. They're bankrupt and shares no longer exist. Long-term shareholders would have gotten absolutely screwed and would be holding worthless shares. So to all the penny stock promoters out there, our common response to their accusations is we're not short any of this garbage or long. That's not a very nice thing to say. We've had threats of physical violence on numerous occasions. I've been invited to participate in these scams. I've been on calls with individuals saying, hey, look, here's what we're actually doing. Why don't you get in on this and make some money? Absolutely not. My integrity is more important than anything. And facts that we present are not liable. So your threats of lawsuits and, of course, these commonly issued cease and desists won't make us take articles down. So just to conclude, never under any circumstances should you invest in shares that trade on OTC markets or the pink sheet unless you're trading ADRs, which is a different story. And we've talked about that before. Be very wary of firms that uplist from the OTC market. There are some examples. Recently, we did some cold supply chain stocks. I can't recall the names of those, but both had uplisted from the OTC market. That's quite rare. Organovo is a great example of an uplist from OTC that we've been following since they started dabbling in 3D bioprinting. They have a $15 million market cap at the moment. I doubt ARK Invest is still invested in that firm. Why they bought shares in the first place is beyond us. But penny stocks are a minefield of disasters waiting to happen. The next Tesla isn't trading on the OTC market. So please put your comments in the comment section. Make sure to share this video with your family and friends, in particular your elderly relatives, as they are very susceptible to being drawn into these sorts of stories. And you have promoters, just as you see in the movie Boiler Room, calling up old people and getting them to buy shares in junk. So make sure you share this video. Make sure to subscribe to our channel. Thanks for taking the time to watch this today.